Hi guys, good day to you. And as usual, this is weekend, and we'll do an analysis from the market on what's might happen next week. And before continue, this disclaimer as usual: trading futures, commodities, and forex market is one of the riskiest form of investment available in the financial markets and suitable for sophisticated individuals and institutions. The possibility exists that you could sustain a substantial loss of funds, and therefore you should not invest money that you can afford to lose. As usual, there's no sure win here. It's just analysis, bias, edge that we can find. If it goes our way, we try to hold our profit. If it doesn't goes our way, we do our best to do an early cut. That's why money management is very important as usual. And yep, let's go ahead and see what will happen next week and might happen next week, because last week itself our analysis on Monday and Tuesday is moving as per what we analyzed last week. Up until Wednesday I didn't do any analysis on video, but things start to change, and let's move ahead. So for this video we'll be doing an analysis based on 1st to 5th, meaning on the 1st to 5th of May. So do we and how will we take an opportunities there and see what's going on in the market to find some buyers. And yeah, let's start away. All right, I compile a few pairs. Usually I'll just do this 5, and let's see what might happen next week. So the first one that usually I do it will be pound dollar. One of my I love pound dollar because of the volatility and the amount of pips that can move. That's the only reason why. All right. First thing first, we got to be very clear cut of what's going on now. All right. Since most of the analysis or most of the pair that I analyze, it might just to advice from me. This is not meant to for you to take trades. It's just for educational purposes only. And moreover, if you were to follow, you just follow with the proper money management. Don't just go all in, because there's no way, just to let you guys know, no way that we can win every time or we can profit every time. There'll be losses in between, there'll be winnings in between, and long run, if we were to take care of the money management properly, the staking properly, we will make some profits. But this is not a get rich thing fast thing, so just bear with me on that. That's the process flow. Maybe another day I'll just do a video based on that. All right, let's go ahead. What's going on now over in why I selected or major based on dollar? Because there's a current sentiment that is going on. Not really a sentiment, it's a big news, something that came out Saturday itself. The House approved 1.9 trillion COVID aid fund. Think about what this gonna do to the market. I mean, nowadays, for the past few years, actually for the past 2 years, all right, all this type of massive big news that happens, and somehow they like to do it on Saturday. Not too sure why. Maybe they want to control the movement of market, so that the price doesn't overshoot and to a panic mode or a bubbles mode, could be that. But those days, when much earlier time, they don't do it on Saturday, they don't approve anything on Saturday, they always do it on Thursday or Friday. But nowadays they just do everything on Saturday, perhaps just to control the market, I guess. That's how big boys play the game. And what do I mean? This is part of the stimulus. I mean, this is very important. The whole wide world is waiting for this. I believe that last week I did mention, saying that Yellen did mentions that there'll be discussion about stimulus, the COVID aid fund, how they're gonna move forward and how much it's gonna do. So House approved it at 1.9 trillion, and now it's on the Senate hand now. So depending on Senate votes upcoming. So for this to pass as to go through the market, I mean the 1.9 trillion to move into the market, the Senate vote must say yes or nay. Right? If Senate say yes, then it will be passed. But at least now we know that 50% it's done. So now it's on the second tier. So if 50% is good enough for us to know that the stimulus have a chance that it might pass. See, this is how we use fundamental to tackle it. Depending if the current news or current things or things that is big enough, it's uh, able to or potentially able to move the market, I would actually trade based on this rather than I'll just go into a trading economics and find all my economically data lineup. The reason being it's because of the attentions that the market is looking for, meaning everybody is waiting for this. So if all the whole market is kind of like aiming for this, what will happen? Think about that. If this done, Monday most probably will get some single directional market for a midterm run or a slightly longer time run pricing into this particular votes. There's a possibility of that. It's not 100%, but there's a possibility that might happens. That's number one. Let me explain a bit before we go over there. Let me explain a bit on what happened, why this drop, this tremendous drop, why the dollar been on. This is a dollar dynamic, and why dollar become a safe haven in terms of fundamentally side. I mean, in technical side, we can see a very heavy upside on the dollar index. Anything that being paired with dollar, there's a heavy drop on Thursday and Friday. See, the dollar has been very strong. Look at the strong, the strength of dollar. I mean, versus the gold itself, since Thursday, it's been diving like crazy. Okay, what happened is that dollar is being affected by a single piece news. Just go back to pound here so that I can write. In a single piece news of bond yield all time high, not all time high, went to a very high price. Okay, it's under, how do I say that? Bond yield rise tremendously, I would say. Okay, what is bond yield? All right, this is bond yield, 10-year treasury bond, US government bonds that is a 10-year-old one, meaning bonds are bonds. Bonds is an interest rate or whatever you guys want to call it behind it. As long as this goes up, it shows that bond got no demand. If this goes down, bond got demand. So it's very clear cut that bond, no demand. There's not much demand in bond. That's number one, because the yield been climbing and climbing and climbing and climbing. Let's have a look at a week itself. Look at how yield went all the way up from the point of 0.5 all the way to 1.5. So it's really high. This is the one that actually sparks the dollar drive, or I would say a dollar dynamic. Based on this reason, if bond don't have any demand, usually, okay, meaning that bond as a safe haven, no demand, usually it will move to equity most of the time. But let's have a look at equity. When it comes to equity, we can see that, hey, equity got no demand as well. If equity got no demand as well, bond also don't have demand. I mean, bond as a safe haven. One of those, when shit happens, people want to buy bond because it's safe. It's being guaranteed or backed by governments. That's why they love it. All right. So if bonds don't have demand, equity, we can see that there's not much movement. Things are still very sideways. Perhaps this is most probably waiting for the stimulus itself, because for this to move, I believe that last week I did mention saying that for this to have a further upclimb or the upside, the stimulus must be passed. Why I said so, why the COVID-8 fund is so important? It's very simple. If the money flow into the market and being given out to the citizens, to the corporates, to whoever that receive that particular funds, any sectors of the economy, it will help the economy to boost up on the next round, because most of the money will be invested back into corporates, and the corporates kind of like shares. They are all limited. They are big companies. All right. So when it comes to big companies, the money will flow back there. Once it flow back there, and guess what? Wall Street 30 or Dow 30 itself consists of the 30 biggest company in the States, or the 30 oldest company in the States. We're talking about McDonald's, Coca-Cola here, so all of them. So if that's the case, if money flows in, there's a potential upside for it to happen. All right, but that week itself, they are waiting. You can see very clearly for the past week itself. Like say this Friday, Thursday, Wednesday, Tuesday, and Monday. Look at the price, how it climbed a bit and come back down again. So this is going nowhere, I would say. From a range that is slightly smaller. That's a dot touch here, so let's put it around here. It's a range that is slightly smaller, went into a much bigger range only. That's the only thing. So I'll put this here. That's one of my key area. Alright, sorry for the cough. Alright, that's one of the key area here. So it's just moving in ranges. In terms of amount of pips, it's not a lot. That's about 1,000. So this might be caused by the dollar drive as well. Alright, since there's not much demand over in equity, we can see there's no demand in bond. The money or the investment or the market is actually moving all their funds, or majority of their funds, all the way to dollar. That's the only way. So that's why dollar have a very heavy climb since Thursday, because of news keep on coming out saying that yield, 10-year yield, it's like super high. They're keep on firing that particular mode. If we were to go and follow up on the news since Wednesday, since after Wednesday, on the timing of Thursday, all this particular news keep on coming out saying that yield is very high, yield rise, yield rise, yield rise. That affected the market for it to have an upside that is really, really tremendous. That's why it moved that way. So now, since this is weekend, that drive, it's being superseded by a new sentiment now, which is House approved 1.9 trillion. I won't be following personally. I won't be following or going after this particular trend anymore. I mean, the downside, heavy downside, panic sell. We can see that there's a lot of panic sell here. There's a lot of fear being formed here. As usual, if market is fearful, we try to do the other way around. If market is greedy, we try to go the other way around. We don't want to buy when the market is greedy. We don't want to sell when the market is fearful. So what I want to do is to find some indication. Is there anywhere or how I can do an opportunity or find some areas for me to do a buy? And why I want to buy this pound dollar is based on one simplicity only. Pound is still reopening up their market. It's still the same thing. For the past 1 week, they're talking about that. And let's have a look at pound itself on the climb. Is this trend, the heavy climb trend, being invalidated? No. It's still an uptrend in long run, like it or not. Just that this might be a heavy correction if it comes to technical. You can call whatever you want, but in terms of trending, it's still an uptrend. This is just a midterm or a panic sell down based on this particular news came out and boom, the market. So it created a lot of fears for people to let go positions, and people just want to go into dollar as safe haven. Yeah, US dollar is safe haven as well, just to let you guys know. So once that happened, it doesn't mean that there's a potential saying that this might go down. For me to stop buying this position, it's on a very simple ideology only. It must at least break this area. This is one of the key area that I look for. Why I say it's a key area is simple. Market still climb like this. So once it climb like this, personally, I have two key areas. First key area, second key area. As long as price breach here and stay below there, then only I would say market structure change. But for now, the market structure still stay the same as a longer run uptrend. This is long run, been uptrending for weeks actually, 1 week, 2 week, 3 week. So it's still a solid uptrend to me. It's a good uptrend for me to do a buy, but I need evidence for me to go into a buy. I only have an evidence saying that House approved 1.9 trillion COVID aid fund, and that is good enough for me. That's really, really good enough for me, because this leads to more money being pumped into the market to drive dollar down. But now I need to see whether dollar is driving down or not. Is there any way that I can see dollar? Yes, it's on the index itself. That's later on. Let's analyze this first. All right, step by step. Okay, this is my key area and this is my key area, or some people call it, okay, this is a key resistance that got broken and potentially turned into a support now. Look at how it reacted to this area. Then this is a key support that's not tested anywhere yet over here. But why I say this is a key? Simple. Look graph again. Right? Why price reacted here is because price climbed again on this formation. Damn. Just bear with me on that. Alright, price climbed on this formation and that's broken this area, came back and tested the key area. It didn't test here, it tests here and rejected and go back up again. So these two are quite a solid area for me to find some entries, not to enter, but an area of interest for me to find some entries. The entries could be on H4 itself, it could be on H1, depending on you guys what you want to do. Just that any time frame below 1H, 4H, it's riskier only because shorter SL, more whiplashes of price. Always remember that price move. Price goes up, goes down, goes up, goes down, goes up, goes down, goes up, goes down before they can go somewhere. That's what it does. So the smaller time frame it goes, the shorter our SL is. Eventually, how many times we want to get losses first before we get to our winnings? Just mention that. That's why it's a number game. It's the smaller the time frame, the riskier the SL gonna be. I don't really trade on anything below 1 hour actually. Sometimes I go into 1 hour to find some entries, sometimes I don't, sometimes I just stay at 4 hour and above. It's much more much more edge on that, more money involved in 4 hours. Let's say that's like 3 or 4 candlestick happening, which is happening now. The rejection, that's about 4. Price been sitting there for about 16 hours. What might you think will happen? You see, for price to comes down, you gotta sit at a certain place, that like here. See what? Just an example. There's something happens here. All right. It started as the, like I say, the bond yield rise news keep on coming out and say horn the market. That's why it came down. But chart, or if we are chartists or we know how to read the chart language, it's much earlier indication saying that there's a possibility things are start moving that particular way. Why? Look at all the push or the rejection that the market is doing. I mean, price been sitting here for how many hours? Just think about it. Okay, in terms of tested 1, 2, 3, try to come down, didn't break anything, goes back up again and test 1, 2, 3. So it's very clear cut that price is rejecting or creating a ceiling or a resistance or itself as a resistance. But can we trade this? No, usually I don't trade this. It's up to you guys whether you want to have a higher risk thing. Because I don't like to trade this is because price always still consider moving an upside and nothing being broken to say that it's coming down. The only way I would take an entry over here based on the bond yield rise news or the news itself. All right, it's you gotta break something, because like it or not, if price goes up, comes down, goes up before it being broken, it's called sideways. I mean, it's stuck in the range. How do we take ranges? Ranges we only take if there's a breakout. So higher risk taker or high risk people, traders, they can actually do a sell stop here. If you were to do a sell stop here, you put your SL right above here. It's about 100 pips away. Look at the market, it gave you about 170 pips, give you that sell stop. Or if this starts to happen, what we can do, we can actually go to a smaller time frame to look for entries, because the edge on 4H have tell me saying that market potentially want to go down based on a break of a structure. This is my structure in 4H, and this particular structure has been broken by 4H, not 1H. If this broken, what time is this? This is 1. So I need 2. So by the time it reached 2, the new bar of 4H came out. So this is my 2. So this is 4H itself. So officially it's what broken. So what I can do is, since my bias or the structure itself says that, hey, things might come down, the fundamental edge supported me, yeah, find some entries here. How you want to enter it over here, it's up to you. You can find some entries here. Okay, you can immediately go in an entry here. Also can put your SL right above here for higher risk. That's what I usually do, because as long as it's broke, 1, 2, 3 being broke. If there's a retracement, I'll take the retracement. If there's no retracement, I'll just either high risk, I'll put my SL here, or slightly lower risk, I put my SL here, depending what you guys want to do, and let the price move. Okay, monitor it further. That's all. All right. I won't be sharing about that, but I'll share further on what might happen next week or coming Monday or Tuesday, depending on what, because this thing we need to do it daily, because updates on news, updates on economic calendar thing, the news, everything, it's day-to-day thing. Everything will be new. There's no way saying that what happens on Saturday reacted on Monday will react on Friday. There's no way. So what we can do is we do this every day as a trader to see where the market react to a certain sentiments that come out, certain feeling that comes out. Because why we call this a sentiment, it's a very simple idea only. It's because it creates fear, it creates greed. That's the only way. See, this creates a lot of greed on dollar. This might create a lot of fear on dollar. That's the only thing. And create a lot of greed on equity. That's how things correlated. So that's the creation of that, and that feeling or that market feeling move that price. That's all. All right. As usual, bear, we can see that bull climb up the ladder and bear jump down from the window. Actually, yeah. But sell usually more on the panic side, psychology. Anyway. All right. I'll explain that another day. Let's continue here. So price broke, comes down. Perhaps you have some sells over here based on you rise tremendously. I did some sells here anyway. All right. Now, what I want to do is house approve 1.9 trillion. I need to bear in mind that structure only can change, or market structure change if this area being broken. So as long as this area not being broken, I'm still having a bias of upside market. I have this. My market structure tells me that market is still moving towards the upside. Now I need to find some evidence. Will the price stays here for me to do a buy? Is this area, current area, a good area for me to go in as a buy? It's a very simple idea. Let's have a look at rejection. In 4H, this is 4H, this is not 15 minutes, this is not 1 minute, this is not 5 minutes, we are talking about 4H. A lot of money involved. Been sitting on the same area for 16 hours. Think about that. Right, 1, 2, 3. All right, here, still no yet. Friday closing, might get some downside. Okay, so we have a lot of evidence saying that price is rejecting, but I'm still missing one particular evidence, which is very, very important. Okay, this doesn't indicate that market wants to go up from here. This is something that a lot of traders missed out. This is one of the key. I'm going to tell you the key. How can we take this trade? What do we wait for? All right. If you notice, every time before I go in as an entry, I will wait for one particular action or one particular movement from the market before I decide whether I want to buy or sell. It's missing the big boys move. If you notice, what does it mean by big boy move? See, we don't want to go into market when there's a lot of retail traders trying to push the market up, because retail traders is impossible or very unlikely that it's able to push the market one side. I like 4H is because there's a lot of details or data here that we can see. See, for me to do a buy, there's an example here recently. All right, it's this. Did you see that price stays and keep on rejecting at this type of areas? Yes. Can we buy? Yes. I'm biased buy for it go up. In terms of technical, without any fundamental, just to let you guys know. All right, this is an example only. What I'm missing here, that here have, is this push. All right, I'm waiting for this push to happen. As long as there's this push to happen and close as a 4-hour, as a Marubozu or long body or whatever that you guys want to call it, only I will look for a buy, because in the smaller time frame, the market structure being broken. So does this. I'm not flipping to a smaller time frame. Or if you want me to flip to a smaller time frame also can. Let me mark here first. See, I need the price to push back up over there first, because if we have a look at the smaller time frame, the market is actually ranging. So do we want to buy or sell when the market is ranging, or do we want to find some solid evidence saying that price is pushing towards a certain area only we go in for a buy or sell? Think about it. If the price doesn't move and break a certain area here, there's no confirmation saying that the big boys came in. We only want to go into the market if the big boys come in. Can you get me? So I don't really trade action like this. I mean, certain price action, people would actually goes in. They will tell me saying that, hey, there's like 2 pin over here already. Think about it. There's 1 pin here and there's 1 pin here. Or hammer, hanging man, not too sure what's the name, but to me it's known as pin bar. All right. So this pin bar, yes, it initiate the first particular rejection. It's just telling me rejection. Market is rejecting. There's a sense of buyer only. But is buyer back in control? No, not yet. Buyer is not back in control yet. Just think about it. If buyer back in control, this is called buyer back in control. There's no sense of any buyer here, because market is still pushing heavily under a pushing phase. There's a possibility if this zone not broken, market will just comes and retest this area. If this retest area without any buyer sense as well, it will go back down more and find until area that dim that the buyer thinks that the area is cheap. This is how we study chart. This is how we look at candlestick. There's a lot of language towards it. There's a lot of signals that we can find. There's a lot of hint that we can find. So even though I'm still a buyer's upside for this particular market, I'm still not entering this price yet. It's not yet solid for me to do any buy. I need the momentum push, then only I can go in as a buy. This is how I would take pound dollar next week. Right? It could on Monday it could be happening, on Tuesday it could be happening. I do not know, because if the price goes back up here, I have a chance to do a buy. If the price goes back down here, I won't do anything until the buyer comes in and reject and control back the market. Because if buyer keep on control, it's just an example. You see, all these are indication of price pushing. Every time they do this, did you notice how the market move? Every time it push, break an area, push, try to break an area, push, try to break an area. Look at how it fly, how it move. Because all this is the initiation of bank comes in and control back. I mean the big boys are the big money. This is the big money, a single direction of big money being pumped into the market. That's the only difference. So try to bear with me here. I'm doing a very detailed analysis with you guys. Right? So not yet a buy, potential buy. Let's see how when the buyer comes in. I want the push. That's the only thing. So since this, I know fundamentally pound is still under the influence of reopening up on the market, and that's the focus vaccine. Vaccination rate is going well. So perhaps yes, pound might be strengthened back, and there's a potential dollar might die because of 1.9 trillion. All the dollars will be converted back into the equities. All right, meaning dollar won't become a safe haven anymore. They will start moving dollars on their part portfolio into a much high risk instrument or higher risk on mode. Currently, last week, since Thursday and Friday is a risk off mode, but the risk off mode doesn't move into gold, doesn't move into bond, it moves into US dollar. So US dollar itself is a form of safe haven as well. In terms of safe haven, there's a few categories that we can move through. It's either the Swiss franc, it's either the yen, it's either the gold, it's either the bond, or either safe haven of US dollar. All right. Okay, I hope that you guys can follow up on this. Okay, since this is pegged towards dollar, we know that I've just jot this down here. All right, this is on last week. Just ignore this. I want to explain what's going on here. So what we want to know is how the pound UK opening up market, meaning not opening up, easing up, easing lockdown. This leads to better economy, vaccination. I mean, all these data or things you can actually find over the net. A lot of news portal, be it CNBC, SCMP, they will talk about all these things. Vaccination rate is getting better, or so these two things sided to pound strength. Now, since pound still rather strong, we want to see is there any weakness in dollar. So this is dollar index itself. So dollar index itself, all right, what we can see is, yes, there's a heavy pushing phase now. True, because of, say this Friday, this Thursday, trading view period separator is being separated in one day, unlike MT4. MT4, if you open up 4H, it will be like giving you the whole week itself. So it's very hard to see things as well, like trading view. All right, Thursday and Friday, tremendous push. Thanks to, just now we did mention that the yield rise. That's the only reason why. So, able to stall out or not? Is there any potential saying that dollar might dive? Is there any evidence? No, there's nothing yet. So we still gotta wait this out. See, we only know that there's not really a key area. I wouldn't call this a key. Yeah, this is a key area. All right. Why I say this is a key area? Because price is do this. Right. Okay, so I have another key area here that is being broken. Damn. All right. Okay. So trend down, downtrend. Two key area been formed. Final key area that they might test. This key area that it came down that time doesn't test. It didn't test well. So price sit here, try to came back down. Yeah, did created a longer leg, but this longer leg didn't push further down here. On Thursday itself, start to rather than use this, I just use the box. It didn't create further leg. It did create a further leg, but when it comes back here, expecting a much more leg happenings or maybe around this area, didn't happen. So if it doesn't happen here and decided goes back up, to me, this is still something that coming down. Final key area. So in terms of rejection, in terms of evidence that saying that dollar index want to come down, nah, zero, nothing. The pressure push is still very heavy. So further monitoring needed. As long as there's more evidence that we can gather over here as a push phase, not a push phase, as a rejection phase, then perhaps only we will consider shorting back dollar. So from here we can see that there's more evidence needed, but from pound dollar, evidence start to gather. Can we buy pound now? Think about that. No. At least dollar index starts to have evidence saying that it want to come down, break a certain areas. For example, like this. For price to come down, for me it's a very simple indication how I would take a trade or to start selling. See, if the price is moving downwards like that, 1, 2, price been sitting there for what, 8 hours, 5 times 4, that's about 24 hours, 20 hours. Yeah, price been staying there for 20 hours. What do you think might happen? Think about that. Potential to come down, but I won't be selling on the top side because that's like catching a knife or catching a falling knife. It's super hard to do that. So I would love for it to break a certain area, because if the price been sitting like that on the bottom before this break and the price been sitting on the top before it break, it's actually ranging. Most of the time we will do some range first, but for us to trade a range, it must be a breakout. So you can actually go to a smaller time frame to find some setups. Even though it break already, let the bar close, because always let the bar close first, because there's a chance that it break and pull back and create a bloody pin for you, a fake out. That's why I don't really like 1 hour. That's one of the reasons why, because the fake out happens if I'm selling on 1 hour time frame. That's where it will go back up and wipe out my SL, because it just still doesn't want to go down. So let the candle close first law. That's the whole idea. Always wait for the candle close. Be very patient about it. Let me find some examples. Find any examples saying that the breakout will happen. Here you go. Just an example only. Not really, because I didn't really analyze this market. See, there's a zone here that we can mark over here like that. Right? So if imagine that you are in 1 hour, 1 hour time frame, price goes down and price decided to close here on 1 hour, then you will say to yourself, hey, broke out correct so I can sell just ignore this all right. Then the price decided on 4 hours to push back up all over again and close right above. Then it just wiped out your SL in 1 hour. If you were to wait it for 4 hours, you will be doing a sell. This is what I want to talk about, right? So always wait for it. So once this happens, close already, don't worry about no opportunity to go in the market. There's always a chance for a retracement to happen. This is where we can find our entries on smaller time frames or HY sell. Indecisive happen, to side weak, small body, this indecisive, sell it. It's one of the signals as well in price action. How do we sell it? Once the price goes back down, close below here, that's where we sell half the body. So I just give you a very good indication how we can sell these sell prices. SL just put right above the wick, close this bar, sell it off, look at how the next day and the next few days move. This is based on 4H. If you want to hold long. If you want to hold shorter term, just based on this. After this, go to smaller time frame, find some more riskier SL, go ahead and do it. Needed more entries on it. That's why always make more than you lose, meaning that every setups when you want to take profits, make sure you write the profits. If you can write the profits further than the losses, meaning that, let's say I have lost three times, one hour gone, 1 hour gone, 1 hour gone, but on the fourth setups, I don't make only 3 hour back. It could be making 5 hours, 6 hours, 7 hours, or 8 hours, depending on how I can ride the trend. If the trend starts to happen, I'll hold on to the trend and keep on riding it on until the trend shows evidence that it might end. Then I'll just take out my position. So from that particular trade, I cover back all my 3 losses straight that happens with extra by a lot. Just think about that. Unless you say you want to focus on 1 to 3, go ahead. There's no right or wrong on this area. But always make more than you lost. Try to do that. In long run, only we can make some good profits from it. All right, back to here. So I'm waiting for more indication on dollar index. That's the only thing. All right. So let's have a look at bond yield. The first indication that starts city for each. Is trend still up? Yep, trend still up. Invalidation of trend or market structure would be where. Just think about that. Invalidation. It's let me have a look. Let's find some key areas here. 1, 2, 3. 1, 2, 3. All right, here. Okay, there's a key area here, and the reason 1, 2, 3. 1, 2, 3. Okay, there's another key area here. All right, I'll just ignore this key area because it's a much smaller time frame. It's testing the first key area, testing the, perhaps the second key area. No evidence gathered, nothing zeros about price might goes back up. Very heavy pressure or pushing phase of downtrend now. Yeah, this is a pressure trend. Midterm trend is very pressure. This doesn't indicate, I mean, this week or whatever we want to call it, this rejection doesn't indicate that they want to go back up. No, doesn't. So potentially it might still have some downsides towards it for this price to move further, this pressure to move further. If this were to come down, it also indicate that what the news saying about bond yield rise might subside or subtle down. If that subtle down, what will happen to dollar? Dollar have a chance might come back down, but in terms of dollar, there's still no evidence on the chart. So there's a lot of matching that we can't do yet for that. So back to here, still need more evidence saying that if you want to go up, nothing yet. Come down, more evidence saying that you want to come down, then go down. All right. More evidence saying that you want to go downside more than upside now for now. But market structure still an uptrend structure. Nothing invalidate that structure yet. Just that we need the price to form further, monitor further. All right. Okay. Let's see. Back to pound dollar. So we have done pound dollar. Needed a momentum push. Let's go to euro dollar. See, is there anything that we can find there? Okay, euro dollar itself. Yep, trending up. Key area broken. Oh my, it's been broken. The higher key area timing is not really broken yet, but on a smaller time frame it's broken. Let's have a look here. If we were to see, then let's avoid this pair. Why I say avoid this pair is because market is still kind of like ranging. It's going nowhere. There's no solid trend. There's only solid direction. Don't really like euro. Euro move too slow. Let's have a look. Okay, let's mark it this way then. Can't see nothing much. I can't see anything. Euro doesn't indicate any strength, weakness. Let's avoid this pair. Can't see anything personally. It's mess. It's very unclear. The trends are unclear. The upside is unclear. See, even though I can drop it this way, for example, and you say that, hey Jason, this is an uptrend, this could be my key area, this could be my key area. Yes, you're right. You're not wrong about that. It's just that this key area, it's not really something that I like because there's a lot of noises here. See, price get jammed up here, price still get jammed up here, price try to push back up, then thanks to Thursday and Friday momentum from the news of the bond yield rising and pressure down. This pressure is not really coming from euro. This pressure is coming more towards dollar. That's the difference. All right. So dollar drive, euro no drive yet. So can't really see anything. That's why I want to avoid. All right. Let's avoid this. Let's go to Loonie. Loonie. See, wherever that took some entries here. See, this is what I talk about. See, as long as kind of break the structure on 4H, I did took some entries here on Thursday, but too bad when I woke up it took out my TP here already. I didn't manage to have time to push the TP further because it was hit out. I was tap out actually, TP out. Damn. Yeah, took 1 to 3. My first setup was 1 to 3 here. Too bad when I woke up, just like, damn, I'm out from the game. Took some good profits, just that it could be more. All right, since we know dollar now, and dollar drive is still might potentially affected by the the stimulus itself. If stimulus being passed by the Senate, it most probably will push the equity market up. Percentage only, not 100% they're going to push the equity because we still need to gather evidence on the chart for that. That's why how we combo it. So once we have that evidence, the first key evidence on the fundamental side, then this might have a potential saying that might comes down. But always remember, Canadian dollar is always pegged against, not pegged with oil. Oil got price, Canadian dollar got price. Oil got no price, Canadian dollar got no price. Or yeah, that's the only explanation I can get, because they produce a lot of oil. Yeah, but then the country relies on oil. If the Keystone XL doesn't go through, you will see more weakness in Canadian dollar. Let's have a look at WTI. All right, let's clear this up. Sorry about that. WTI clear uptrend, very nice. See, this is the things that I only do. If there's a very clear cut things, and we go in to find some setups. If the structure is like that, how the hell am I going to do it? It's like, oh, climb, oh, get stalled out. Oh, yeah, I broke. Yeah, I came down again. It's like, where the heck you want to go with? It's things like that. If it's unclear, just keep it aside. This clearer or this clearer. Think about that. Take this lah. It's easier to trade. It's easier to find areas. Because there's more demand here. Why? See, all the pushes. Look at that. All the bank push, man. It's very nice. This? What push? Can't even see anything. Yeah, push a bit. Push a bit. Push a bit. Oh, got push back. Push a bit again, got push back. Now we got push back. So it's kind of like on the longer term, it's ranging. So what about that? Alright, back to here. Another story that time. Okay, clear structure. Nice structure. Potential to goes back up again. Got stall up here. Alright, structuring wise, price goes up. Let's see, where's my reason on up. Alright, okay, we have a trend here. Whoosh. Can you see a trend? Done. We have a trend. So we have a carrier. Done. So it's that simple to analyze market. Yeah, can you go down to D1? Of course, you can go down to D1. No worries on that. Go up to D1 and mark. But if you were to mark on D1, then longer waiting time, longer heavier SL, and find some rejection over in 4H, still the same shit anyway. Sorry my language. Still the same thing. So we can see a very clear uptrend now. So price, no clear rejection here. Price broke here. So if price broke here, rejected here, I'm not selling this thing yet. It's because the whole cycle of the momentum is still on the upside. I don't go against this bunch of buyers here. And think about it, if economies start to recover, countries to countries start to opening up their or easing up their lockdown, the demand for oil will eventually slowly and slowly goes up. That's why it went all the way up to what, $63, $64. Okay, so price goes up, price comes down back again. Not really a heavy push. See, this type of pushes, there's not much indication of big boys came in and pushed the market, because it's very unclear that the push are supposed to be like that, a very clear, a very clear cut push. Think about this. This is big money. This is heavy money. This is like one die cannot die, those type of money. So most probably these are big effect. That's mean price still indicate that potentially percentage wise upside. So we know very well that in order for this structure to be invalidate, it's as simple as break and close below this area. Then might have a chance for invalidation of structure. So if structure still stay the same, doesn't do anything, potentially might have an upside. Upside where I don't know lah. It could be here, could be here, could be here. Just put upside only. So this is what we know now. But can price push from, it failed to push from this area, this key area. Can price push from this key area? Maybe. But we need to gather more evidence, need to have more sticks to happen for it, more time for it to flow before we can say that might go up. There's no buyer sense or any buyer comes in from this area yet. Full with seller, let's get this out first. Price is full with sellers now. What's going on now? If we want to sell, we are selling against this trend. This anytime the big push or the bank push or the big money will comes in, that's really headache. If we want to buy, we still need to wait for more evidence that price want to buy with them rather than without them. There's no indication of price sitting. There's no indication of price or reject, still transform. So let's wait it out. So for Canada this is called what, pair correlation. The similar idea. There's no evidence of price sitting. See, I don't want to be doing like, oh, Jason, there's a indication of let's say there's a key area here. Oh, there's another key area here. There's another key area here. Whatever you guys want to call this, a support and also resistance. There's a support and resistance everywhere. But the whole idea is to find what it's doing now. See, if this is doing this now, there's no current evidence of this type of pushing. It's very hard for us to gauge where the price want to go on. It's practically impossible. See, for every time the price goes up into an area like this, see, we can see this type of pushes happening here. This is where we gather our evidence saying that that potentially might go down. If it's like this, and say I sell here, this push phase of the upside might just continue all the way up. and up and up and up until seller decided that that area is cheap, then they will start to come in. So for now, Loonie itself, I mean USCAD, there's evidence on the fundamental side only, but there's no evidence on the technical side. Can't be matched. We still gotta wait this out. So by Monday itself, not much trade that we can do. So we just wait out for more evidence to gather and see how it goes. Don't just go press high. That'll be very crazy. It's money involved. At least we do some edge like this. For price to goes down, some edge. For price to goes up, some edge. Broken, then we sell. So this is why we sell. See, broken. Just an example here. Price broken here. Price sits back here. Okay, let's put nicely. All right. The bigger. It's easier to see. All right, reject, 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 reject. Look at all the rejection here. Price try to go up. All right. See, that's why I don't buy. That's why did I mention? Yeah. Just I mentioned what I'm waiting for pound dollar. See, in H4, there's no buyer sense. Why I want that momentum bar? I want to buy with them. As long as there's no momentum bar to break any area or just to come in and say, hey, I'm here, I'm going to buy. The chart doesn't say that to me. It goes down. It creates this. Balik pula. I mean, this pula. Alright. So it creates this. Rather than first, it break out first, I'll go like, oh, that's a breakout. Alright. Retest. Comes back out. Retest. Hey, this breakout, funny. Whoever that sell this, no problem, because it's a breakout trade, as long as you put your SL right above here. The interesting part is the market decided to stay here as well. Look at how nicely it sits. So if it starts sitting here, and the market start to sit here as well, for the past 4, 8, 12, 16 hours, it's trying to decide where it will go. If this bar or this price or this push is towards the upside, then we will call this as a false break. If this push down, we will call it a breaking bar. So after breaking bar, confirmation starts and say that, hey, I'm going down, brother. So we can actually go down to a smaller time frame and see anything that we can sell down and continue this downside only. I mean this push, this downside. Alright. This is how we do multiple time frame. Sometimes we can use multiple time frame, or sometimes we don't need to use multiple time frame because we just want to sell. But I need a confirmation saying that I can sell. This is how we gather evidence. This is how we gather confirmation. That's all. That's what I do actually. All right. Like I say, still need more confirmation, so can't do anything. Dollar yen. A lot of confirmation needed. Damn. All right. I believe that Fukushima case of the earthquake is getting better and better. It's been 2 weeks past that. This push is based on the what push, the damn, my brain get jammed up with it. Yeah, bond yield rise push, strengthening dollar tremendously, and yen somehow can see strength, and yeah. All right. Okay, back to here. In terms of charting, we have a key area here, we have a key area here. All right, that's our charting, because it's very obvious that price goes up. If you guys want to intraday, not say cannot intraday just follow this trend. These are all the intraday's trend. These are the swing trend. So what I want to do is to find some evidence. If the price comes back down here, we can do a buy. But because if I were to do that, it's might bit risky. It's because of the evidence that I can gather as usual. This is dollar as well, dollar pair. The evidence from the stimulus itself might push dollar down, potential, but whether it can push or not too sure yet. So there's a lot of waiting stuff to see here. So if it start to push dollar down, I want to see what it creates. Is there a pushing phase? Is there a jam or stall out? So still require a lot of monitoring. It's not saying that price comes back down here, reject, 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 I want to take. No, not about that. It's what's going on currently as well. What's the current sentiment? How would the market feel because of a certain news? What is the economy lineup? Is there any economy lineup like GDP coming up? Is there any economy lineup of certain speeches by certain people? All right. So that's what it does. All right. Okay. So still waiting to see what's going on, and let's see how he move from here. Okay. Yum. Okay. After this, let's still wait it out. I mean, in terms of pushing phase, yes, price is still very nicely pushing up phase, and been pushing for the past 1 week. No evidence yet, no rejection yet, nothing that I can see, no price sitting. I won't be using all this area yet. I'll just see what it does itself. Once all the evidence start together, only try to find some setups. Still gotta wait. So hope that you guys enjoy this analysis. Yeah, one more thing before I say bye bye to you guys. And I think I need to do another video on Monday after all these things happen. All right. Wicks. How do we use wicks? This is the interesting part. Wicks below here is called greed. Fear up here is called fear. So we can see market starts to fear. So that's how I use wicks. Volatility index, market kind of like, oh, it's quite fearful now. It's very, very obvious. So the fear might end because there's evidence of reaction. Right? I'm still missing the push, as usual, but there's a lot of rejection. There's a lot of evidence saying that, hey, I might come down, I might come down, I might come down. Might only, but not yet. Until my this area broken, as usual, only I would say, you potentially come down. Then only I say market is being greedy back. So, but for now, I can see that market is very fearful. It's driving the dollar up to safe haven. And yep, that's all I can gather for today analysis. And for further analysis for Monday trade, I don't think so there'll be any trade that we can take. I mean, personally, I won't be taking any trade on Monday. Too bad. Perhaps some sales. The only way I can do on Monday, there's no swing, there's no evidence. Perhaps it's either scalp or intra. That's the only thing I can do. But quite high risk for that. Let's see how it goes. Let's gather more evidence. Price fluctuate most probably around here. Alright, for swing trader, nothing comes in yet. Intraday trader, slightly higher risk. You can buy and sell actually, both sides. Scalping and buy and sell. So whichever your indicator tells you, it's good enough. This type of reactionary area, usually very, very nice for scalpers and intraday. Why I say so? It's very simple. Okay, for intraday player, all we need is an area that price might goes up and down. That's the only thing. You can open up some indicators, oscillators, whatever thing that tell you some overbuy and oversell. As long as it comes here, buy, it comes here, sell, it comes here, buy, it comes here, sell. That's all. And some traders that I know, they would like to, sell, comes back down. Okay, take my profits. Buy, goes back up, takes my profit. That's the only thing they do. So it potentially range here. So in terms of swing, there's nothing much here. Just intra, what to do? There's nothing much really. Until these two areas broken, only I can say that potentially it might go somewhere. So still waiting for the push for swing. and pound really nice to scalp and swing and intra. All right, thank you very much. Those that didn't subscribe to my channel, you can please help subscribe to my channel. Just click on the subscribe button. And those that want to follow me on my Telegram, I've been pushing a lot of news lately on the Telegram to share with you guys what's going on. Just join. We have mentorship lessons as well. We have guidance. It's up to you whether you want to join us or not. And yep, subscribe to me. I will do my best to do another video on Monday itself after everything done the whole day, and let's see what we can do on Tuesday. Alright, the more subscription, if you support me based on subscriber, I will do more videos, especially if I can do daily. Help me subscribe. I will do my best to do everyday analysis like this and share with you guys. Alright, thank you very much to listen to me. And as usual, this is for lesson purposes only, education purposes only, not telling you guys what to do, where to take. It's up to you. It's your own risk on that. If you believe this structure, it's on your own risk. Because it might work for me, it might not work for you. Alright? Okay, that's why this happens. Not meant for everyone. Everybody have their own style. Everybody have their own way of trading. Everybody have their own analysis. That's why price goes up and down. That's the reason why. So retail trader usually kind of like be a bit like what the banks are. What the bank do, it's very clear cut over here. But always be very careful. Bank trap as well. There's always a SL hunt by them. Free slippage. Who don't want? Alright, thank you very much. And yep, that's the analysis for this few pairs. This for Monday itself. It's actually meant for Monday. And Monday itself, I'll do another video and I'll see you guys again. Alright, thank you. Bye.